Markets wrap the week with mixed emotions, steady indices, volatile commodities, and a tech giant at a crossroads. The S&P 500 continues to look constructive midterm, while oil and gas tell very different stories. And as for Amazon, it's gearing up for a move that could define its next chapter. Let's unpack it all. And today, we start with the commodities sections, which is quite extended. And our first item here is oil. So what we are seeing here is oil closure on Friday. It's quite an impressive one if we look at the weekly frame here. So we have a strong bearish engulfing, and the chances for moving lower are significant. However, on the daily frame, it's a very interesting one, because the bottom here, the closure is exactly the same up to a basis point, and I might be looking at this as a potential matching low, which could be a bullish candle formation. However, we need to see a confirmation, and most likely it will come in the next 2 days. The next 2 days will be extremely important, because there is a chance for oil to form a falling three methods. We have a big red candle, three consolidating one, and another big one. So if it closes like this, we'll discuss the exact level in our daily report. And if it closes like this, it will be a strong bearish continuation. Now let's have a look at the chart. This is the chart with the flags that we've been tracking since the middle of June. Chart is practically the same. The little deviation here, we had one more smaller flag and another one with a tiny one. So right now we are tracking this target. 57 is the next one, but we wouldn't be surprised if it moves much lower. We discussed the chart with our members in the weekly report, Elliott Wave chart with the exact targets and the waves down the road. So if you're interested, you can check it, and also the long-term perspective there. Now let's have a look at oil giants, ExxonMobil, Chevron Corporation, and ConocoPhillips. This is their monthly closures. What I can say that they have some different perspective, different outlooks for the future. I would say that ConocoPhillips is struggling the most, and it had a bearish engulfing candle on the monthly frame, which almost guarantees the move downward. It's a very high probability at this moment. For Chevron, it's slightly different. We have a bearish harami, which requires a strong confirmation, which is not there yet. Of course, we would need to wait for another 4 weeks to make this happen. And the weakest link here is ExxonMobil, and after a primarily bearish candle, it formed another big one, harami, potential bearish one. But what I'd like to say that Exxon is probably the most disappointing investment for long-term holders. If we look at the annual frame, for example, we can see that right now it is sitting at approximately the same level that it ended year 2022. So it's been up and down, but long-term is at the same level. So it's been a very long and strong consolidation. Perhaps before the moving upward, I would say that the long-term, very long-term annual perspective still looks positive for ExxonMobil. Well, now let's have a look at another commodity, and this is natural gas. The fall season is here, and now it's time to think about natural gas. What would be the next move? So I'd like to say that the closure of the months was impressively bullish. We have a tower bottom with a chance to move higher. The same happened on the 10-day frame, the weekly. all of them are bullish. I'd say that the weekly made a very strong effort and closed above the 200 weeks moving average, which is a significant bullish signal. And at the same time, it formed just a moderate bearish candle, which has all chances to be reverted. If we look at the Elliott waves here, this is our discussion, our target that we placed just 2 days before a big jump, big 20% jump for natural gas. And this is exactly what is happening right now. It's ended right in the middle of the target, and since then we can measure approximately, so it added 25%. Right now it's in the target for wave 3, and if it is brave enough to form an impulsive wave upward, it would be looking for a big rally that will continue further on. But we will discuss the long-term perspective in our weekly and monthly reports that are reserved for the members only on the website investingangles.com. Now let's have a look at uranium, and we usually start with global uranium ETF, URA. What are we seeing here is a fairly strong bullish closure on the monthly frame. It's a bit overbought, but I wouldn't be extremely concerned at this moment. The weekly frame most likely formed a consolidating candle, and after a few weeks of consolidation, there is a chance the rally will resume. And the daily so far is looking moderately bearish, but very close to neutral. Now, if we look at the Elliott waves, this is the chart that we proposed at the beginning of May, when a global uranium was only $27. Right now it is sitting at 50, and I think that this is in the middle of wave 3 of some degree, which could be part of wave 3 of a higher degree. And if we look at the short-term perspective, this is wave 1, 2, and I think that right now URA is forming wave 4. Another leg is due, downward is due, but it's gonna be rather shallow. After that, I would be looking for a wave 5 of 3 over the next couple of months. Well, that's the perspective for URA. Now let's talk about energy fuels, Quad U. A fairly similar situation. We have a monthly closure slightly above Bollinger Bands, but so far it looks constructive. And the weekly closure, very similar, posing candle. The daily is neutral, slightly leaning bearish. If we look at the charts, this is the one that we discussed recently. I just made some adjustments here. I think that this is in the middle of wave 3 right now, and once it is complete, maybe a little higher here, I would be looking for wave 4, which might take a month or even longer to develop, and after that wave 5. By the way, this is our call on April 9th for those who missed it. The stock was at 370, 380, and we said that it is going to be a very significant rally. At the time, I projected 138% rally towards $9, but right now it is sitting at 16.55, which is 333% after this call on April 9th. Quite an impressive one. I hope you were on the right side of the board. Now let's talk about some agricultural products, and let's start with coffee. Coffee is looking quite bullish. If we look at the monthly frame here, after a very strong tower bottom, we are seeing a consolidating candle. It doesn't look a very strongly bearish, mostly like neutral, and then the green candle, the current green candle in October, most likely to overcome it. And on the weekly frame, after bearish engulfing, we have two consolidating ones. I think it's going to be a reversal because it still holds all major support lines. And on the daily frame here, we are about to record a 50 over 200 days moving average bullish cross, which will support a rally upward. If we look at the long-term perspective, something that we discussed way back in June, no changes here. I think that the wave 1 has been complete, and coffee might be starting wave 3, which could be much higher from here. And if you look at the shorter frame, this is the 5-hour frame, so the impulse, we have an impulse 1 and potentially completed correction 2. Now at this consolidation, after this consolidation, I would be looking for wave 3 upward. That's all for coffee. The next one is corn. Corn is technically bullish. It had a monthly closure in August, very strong bullish engulfing. September it took a pause, and I think that October will be significant. And somewhat similar on the 10-day frame, fairly strong one, sitting above major support lines, 8 period CMA. And if we look at the daily frame, this pullback was clearly corrective, and I would say it could likely be a flag for the next move higher. If we look at the longer term perspective, this is the chart we discuss. We have been discussing since the beginning of summer, I think. And I think that wave 1 mostly done. This was an impulse. Now it's a corrective wave 2. Once it's done, another wave should be significant. I would be looking it for as a wave 3 of potentially 3 or wave C. That's so the corn is a continuous consolidation, but is ready for a strong bullish move. The next one is wheat. Wheat is pushing downward. Unfortunately, it wasn't able to form a strong bullish reversal here, and now it's formed a deliberation candle combo, 1, 2, 3, these 3 green candles, with a very good chance of next candle to be a red one. The monthly frame closed with a bearish continuation candle, and I'm looking for lower lows, perhaps the lower than the one in August. This is our long-term chart. We've been tracking since August 2022. It remains the same. And we had a very great outlook here, and our projection, timing projection, and level projection was just plainly awesome. And right now, if we look at the smaller frame, I think that wheat is forming a final ending diagonal, which is quite significant, and it's already taking 3 years to form. One more lower low, I think it's due. Once it's done, we could be seeing a very significant rally. If the wave changes its character from corrective to impulsive, I would be looking for doubling the price for wheat in a very short period of time, probably in a year or so. Well, that's wheat, and now let's talk about something that is badly needed for electric batteries. So, lithium. An impressive quarterly closure, a very impressive. Most likely it's going to be a big double bottom here and a strong move upward. However, the move was extremely strong on multiple frames, including the monthly, and I would be looking for for perhaps a few months of consolidation before moving higher. That would be reasonable to assume, especially if we have too many overbought frames. The weekly and on the daily. The daily is very high, 82, 83 RSI right now. If we look at the chart, this was the one that we shared in the middle of August when lithium ETF was $45, $46. Right now it is sitting at 60, and it added 30% after the call. The call was here. And I think that this wave, either wave 5 of 3 or wave 3 of 3, of much bigger 3, that wave 3 would be somewhere here. That's another perspective. So far, I don't have a distinguishing signal which would take them apart. So in any way, we are looking for some pullback. It's going to be either wave 4 of a higher degree or wave alternative 4 for a smaller degree. But after it is complete in a couple of weeks, maybe a couple of months, we would be looking for a continued rally higher. Now let's move on, and now let's talk about the major market and the S&P 500, our weekly analysis. So what we are seeing here is quite impressive. Now, we discussed already the monthly and quarterly closures in our monthly report just a few days ago. Now we are looking at the midterm frame. The weekly closure was bullish on Friday. The same, the 10-day frame for the futures also closed with a bullish continuation candle. If we look at the 3-day, it is bullish, finally reversed this bearish engulfing, which was quite concerning 2 weeks ago. And the daily frame, it failed to form a bearish combo. Right now, I think it is more like a consolidation close to neutral. Perhaps we might see some weakness at the beginning of next week, but in general, I would be looking for a continued rally here. This is the chart that we shared at the beginning, at the end of April, and now we are still building on it. So this was the chart version of July 31st, when we first identified the next target, 6969. So far, it is very close to it, and it is already in the target area, 6969 here, getting closer. I think that this is going to be wave 5 of 3 rather than wave 5 of 1 in green. At least some technicals are supporting this idea. And on the shorter perspective, this is the purple count, which remains the primary. I think this is the final wave 5 of 3, which is building here. So wave 3 might even extend a little higher here, depending on how it closes and depending on the technical footprint. The next couple of charts here is the monthly, the weekly closures of large caps and the major S&P 500 sectors. But we already discussed them in our strategy digest, which I published yesterday, and you're very welcome to watch it and see also other elements of our strategy that we discussed there. And now let's talk about our swing room.
Frustrated with lackluster returns in your trading or investment accounts, even your 401k? At Investing Angles, we provide quant-driven swing trade signals and daily market analysis, consistently delivered stronger results than the S&P 500. In fact, our trading room achieved a 41% gain that work across all account types. Scan the QR code or click below to start your free trial today.
Our swing trading room was long as of October 1st. Over the past 12 months, our unleveraged swing portfolio outperformed the S&P 500 more than 2 times, 41% versus 17. This is the data from 2 weeks ago, and thanks to precise entries and disciplined exits. All credit goes to Captain David, whose focus and consistency continue to deliver exceptional results. And before we move to the wrap, I would like to introduce the feature of the day, and we will discuss today Amazon. What we are seeing for Amazon is concerning and it's exciting at the same time. So let's start with excitement. So 3 months closure, quarterly closure. Amazon formed a bullish, I treat it as a bullish continuation doji. Most likely it's going to be just a consolidation before the next move higher. Why I think so? Because on the monthly frame, we have a very strong 3 white soldiers, and just in the next 2 months, Amazon wasn't able to reverse and reconfirm a bearish path. So I think that the next move would be upward in general on the monthly frame. However, there will be a couple of weeks of weakness, and at this point, the weekly closure is bearish. However, it is getting closer to the end, I think, because the momentum is not very strong here. And this is best seen on the daily frame. I think that Amazon is very close to completing this bigger corrective wave. And I am talking about this potential wave. So this is phase A, wave B, and wave C. Perhaps one more lower low, and we might see a big rally to restart. The wave B is clearly corrective, and wave C is looking like an impulse, which requires one more lower low to complete. I think that the 200 days moving average would be a support line for this move. And if we look at the long-term perspective, this is the one that we discussed way back in August, saying that Amazon is about to make a move and most likely to form wave 2 here. So this chart remains the same, unchanged. I think that this is one ABC formation for wave 2. Once it is complete, this was the target that I placed then in August. I think that's what I'm looking for. And once it is here, I would be looking for wave 3, and the next wave could be wave 3 of a larger degree. That's the perspective for Amazon. I think one more lower low, and we should be looking for a reversal, combos, and signals. So now let's summarize everything. Oil remains predominantly bearish, with the next big checkpoint coming next week. Stay tuned for our daily updates. Natural gas continues to impress after our earlier reversal call, breaking you about 25% and maintaining a bullish posture. Uranium stays long-term bullish, though it may consolidate in a short to mid-term, a few weeks to a couple of months. Coffee looks ready for another caffeine-charged leg higher. Corn is coiling for a rally, while wheat struggles through what could be its final dip before a bottom. Lithium's surge looks overstretched. A pause is long overdue, but the long-term outlook remains very constructive. On the index front, the S&P 500 keeps its mid-term bullish structure. The Dow, Russell, and Nasdaq forecasts, along with precise targets, are detailed in our written reports published earlier this weekend. Must-reads for everyone serious about positioning. Our feature of the week, Amazon, shows potential short to mid-term weakness, but its long-term outlook remains impressive. Special studies on Apple and BlackRock were also shared on the site today, available exclusively to the members. And if you missed the strategy digest yesterday, it covered volatility, the dollar, bond market plus TOT, sectors, and key currencies like the Canadian dollar and yen, all essential context for the week's moves. Markets are evolving, and we are watching every frame. To access our written reports, Elliott Wave maps, and high-quality charts, start your 7-day free trial at investingangles.com. Join our Discord community with Master Trader Kyle for daily setups on top names and follow us on daily analysis and updates. Engage, share, and stay ahead. At Investing Angles, we chart the charts before the crowd even blinks. Thank you for watching.